Hi, this is Alkemy with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 18th of October. Starting off as usual with the FTSE 100, where we're back above that 69.60 support line there from back in March. We've had a couple of days where that was a resistance, but it looks like we're going forward from here. End of day close above 69.60 could take us back to recent resistance around the 70.90 area, maybe even scraping up to the initial September support at 71.30. Below 69.60, still the chance of 68 or even 6,700. Worst case scenario, 16,660, which is that lower March parallel. Moving along to pound dollar, which has certainly settled down after all the rotten fruit thrown at the government over its mini budget. Here we've had the market just breaking that line of resistance there from August, but not able to break the 50-day line. That's the crucial part, really. Failures below the 50-day line suggests that we're at the top of the range, and we will then have to test the 109, 110 area once more, which is that support line projection from May. If we do get an end of day close back above the 50-day line, then I suppose it's back to 116, 117, which was the initial September peak. But the pattern at the moment, which has been in place basically since March, is of the cross failing at or near the 50-day line, which is falling. And then this is the shorting point rather than below 110, obviously. Moving along to the stocks, and it looks like the recent BP news is filtering through to Alchemy at the moment. Got this rising trend channel in place since November last year. We bounced off the floor of the channel there, that March support line there around the mid-90s. Broke a line of resistance there from April around 99 pence. And we've actually got a rising 50-day line near the lows, which has been in place for the last couple of days. Inside day breakout today. Want to see an end of day close through 120. If we get that, then it's obviously back to the old August peak around 132. But we are set up now for a move up towards the £2 area at the top of the channel after that extended basing that we've had, and the 50-day line, which makes this chart look rather healthy, as does that uptrend line in the RSI window as well, off which we have just bounced. Moving along to Audioboom, which is a sort of perennial bear target, and here we can see that unbelievably we've managed to break a resistance line there. It's the first time we've done that for quite a while, but there's a line of resistance there from June. We broke that there versus around the £5 level and above £5 on an end of day close. Might have another of our periodic tests of the 50-day moving average. In this case, it's around £6.10. As you can see from the chart, since May, we've kept on, we've rallied up to the 50-day line and then failed. So we would be hoping, or the bulls will be hoping at least, that this stock will deliver an end of day close or a weekly close above the 50-day line to get us up to a retest of last month's resistance near £7 as a best case scenario. Back below £5 though, and we're looking at retesting the lowest levels below £4.50. But slightly better look there with that trend line break, and we've still got that uptrend line in the RSI window, which may give more momentum to this situation than it has done in the recent past. On to Bushveld, where I see there's some social media interest at the moment. Here we've peaked above the, poked above the 50-day moving average. It's the sort of thing we want to see at Audioboom. Breaking the 50-day line at 5.25 and looking for the resistance line there from June at around 6.4 pence by the end of this month. The upside or recovery argument is in place while we hold above 5 pence. Above 5, looking for 6 or 6.25. Onto a stock which I don't normally look at, but couldn't resist this trend line break from Card Factory. Multiple support there at 40 pence, breaking that line of resistance from June at 45. Above 45, there's a chance of the shares heading back to the top of the range at 65 pence, maybe by the end of next month. Not the greatest of trading situations here, but this looks like it's had a flurry of interest today, and let's see if we can build on that. Only back below 40, obviously, really killing the idea of a recovery, but it should now hold at 45 pence plus. On to Coro, which is the next contender. Here we gap through that line of resistance there from April. Second unfilled gap to the upside, which is a very bullish technical signal. End of day close above recent resistance at 0.33 pence, and we should be on our way towards retesting the April peak at 0.5, maybe as soon as the end of next month. This looks like a decent breakout here, decent setup, and is slightly reminiscent of the IGAS, start of the IGAS movement, which obviously did very well. But the two unfilled gaps to the upside, strong signal, got 50-day moving average rising as well, so everything to play for there for the bulls on this breakout. Funding Circle, not the sort of stock that I normally look at, but again, here we've had a welcome breakout. In this case, through the old August-September resistance, which was around 45 pence. Above that, on an end-of-day close basis, we could be heading to the top of that rising trend channel from back in July, as high as 70 pence. And maybe that could be seen as soon as the end of next month. Upside valid, certainly while we're above the 50-day moving average, and that's currently around the 40 pence level and is rising, which is a helpful thing to do. On to Jules Group, which obviously has given investors a bit of a headache over the recent past. Here you see that we've broken a line of resistance there rather tentatively. Horrible island top there earlier in August. Got the chance, I suppose, of the shares hitting that 50-day moving average at 18 pence is the best case scenario, but that's only while we hold above recent resistance around 10 pence. Above 10 pence, looking for 18 as a best case, but you're relying on the bullish divergence there, making the shares push higher after the already decent rally that we've had over the last week or two. Moving on to Powerhouse Energy, which is more than doubled since Friday. We were looking for a best case scenario target towards 2.2 pence, which is basically post-July resistance, maybe a flick higher to the 200-day line at 2.4 pence. We've been below the 200-day line continuously since last November, so that is quite a big ask over the near term, but maybe if the shares can consolidate above recent resistance at 1.75 pence, then we could see 2.5 over the next couple of weeks once the dust has settled. On to another stock in a similar area, which has done very well over the recent past, Quadrise Fuels. We were looking for the shares to hit the top of that broadening triangle from back in June at 2 pence. And then as a best case scenario to hit that resistance line there from the beginning of the year, or basically 2022 resistance at 2.75. We've done both of those, which is very pleasant indeed. The view now is that while we're above the floor of that gap there from back in April, around 2.5 pence, we could see an extra push higher for the shares up to 3.5 pence, which is basically post-November 2021 resistance, but it has to be said, now anything we get over and above 2.75 pence would certainly be a bonus rather than a right. On to stock which has been was in the news earlier this week, and here we've got Rockfire right on the ground in terms of the RSI. So the RSI around, well, in single figures. Hasn't necessarily meant that the shares will bounce in the recent past. We had a slight upward move from oversold back in August, and then we failed at the 50-day line. Currently, we may be at the bottom of this falling trend channel from March. If we are, then we've put in the lows around 0.12 pence and would have the chance of trying to fill that gap up towards 0.25. But it has to be said, that is the most optimistic scenario, although we are helped by the RSI being very low indeed. Probably the best thing here for the bulls is the support line projection from March, suggesting that this is the bottom of a falling trend channel. Moving on to a brighter situation. Here we've got Shanta, which has broken a resistance line there, and the 50-day moving average at 9.5 pence. Above the 50-day line, looking for a resistance line projection from back in December as high as 16 pence to be hit maybe by the end of next month. But long consolidation for the shares, so hopefully this breakout will have legs. Go on to THG with trepidation, but the charting reason for covering this is that we gapped down back in June, and we've gapped up today through a line of resistance from back in June. That's around the 47 pence level. So holding above the floor of the gap at 47, and that resistance line powered by that bullish divergence in the RSI windows and uptrend line there from last month. We could see the shares get up to resistance on the way down, up to 64 pence. Not too much on the upside there, but that would be better than a kick in the teeth. In fact, we've had the latest gap there, which makes the bear trap island reversal on the post-September timeframe. So above the 47 pence level, looking for around 62 pence over the next 2 to 3 weeks, something of that order. Finishing off with Westminster Group, which I know has its fans amongst the elite of the Twitterati. Here you can see that we've had a rising trend channel in place since February, had sideways shuffle along the floor of that channel, which is normally a decent sign. RSI back above 50 as well, so that does suggest that we should at least have a retest of last month's resistance around 2.4 pence, even if we fade after that. The key here is to have an end of day or an end of week close above the 200-day moving average of 2.15 to give Westminster the chance of maybe a year-end target as high as 3.5 pence. That would be, I'm sure, welcome after the bear trap that we had at the end of August. That's it from me today. More updates tomorrow.